Exercise 4-4 is probably about as basic of an income statement as we can have and still have the comprehensive income number. So we're given a trial balance, sales revenue 2,300,000, cost of goods sold 1,400,000, selling and general administrative expenses of 420,000, interest expense of 40,000, and then we have a gain on debt securities of 80,000. And it says here in the narrative, the gain on debt securities is unrealized and is classified as other comprehensive income. Now, when we get to the chapter on investments, we will talk about why that, what makes it another comprehensive income versus one that would be recognized on the income statement. The trial balance does not include the accrual for income taxes. Lindor's income tax rate is 25%. There were 1 million shares of common stock outstanding throughout 2021. Okay, so we're just going to start the same way. We're going to have our sales revenue. This is a multi-step income statement. So we'll have our sales revenue, and that's the 2,300,000. Then we're going to have our cost of goods sold, and that's going to be the 1,400,000, and that gives us our gross profit. And that would be 900,000. All right, now comes our operating expenses. And we're going to have our selling and admin expenses, 420,000, and that's our only one, so we didn't indent it this time. And we subtract that off, and we get 480,000 for our operating income. Now, notice how I offset the operating income out a little bit. I put the selling administrative here a little bit inside, but then the operating income is back outside. Okay, so then we get to our other income. And expenses. So we're going to have the interest expense, and that's our only one. And that's 40,000. And again, we'll put this in parentheses. That will give us 440,000 as our income before tax. Okay, then we have our income tax expense. Now this one you're going to have to calculate, and we're told that the income tax rate is 25%, so we simply divide the 440,000 by 4, or we multiply it by 0.25, same thing. All right, and so we'll get our income tax expense is 110,000. That leaves us with net income of $330,000. Then we have our other comprehensive income. And that is reported net of tax, right? So our other comprehensive income is $80,000, but we're going to take the tax out before we report it here. So since the tax rate is 25%, we're left with 75%, or 3/4. 3/4 of 80,000 is 60,000. So we're going to have 60,000 here. Add that together, and we get comprehensive income. And that will be 390,000. Okay, we are also told in the narrative that there were 1 million shares outstanding. Be careful here when you do this. So your earnings per share, EPS, is going to equal the net income, 330,000. Don't go down here to the comprehensive income, divided by 1 million, and that will be 33 cents per share. All right, so that's exercise 4-4.